What's next on tariffs? President Trump slaps a steep 50% tariff on Indian imports and freezes trade talks until the dispute is resolved. Experts warn this could shrink India's GDP growth by up to 1%, a serious worry for the stock market. But there's hope. Negotiations may bring tariffs down to 15 to 25%, so traders are watching closely. India's tariff rates remain higher than Bangladesh, Vietnam, and even China. Meanwhile, a possible US-China trade deal before the August 12th deadline could trigger foreign capital outflows from India, adding more pressure. Reports suggest a temporary deal first, with a final agreement after Trump meets Xi Jinping later this year. The question is, will India's market get relief or more turbulence ahead? This week, all eyes are on inflation numbers from India and the US. On August 12th, India will release its July CPI inflation, expected to slow to 1.8% from 2.1% last month. 2 days later, July WPI data will be out. The RBI has already trimmed its FY26 inflation forecast to 3.1%, signaling a benign outlook. In the US, CPI for July is forecast at 2.8% year-on-year, up from 2.7% in June. But here's the twist. Trump's steep tariffs could push prices higher, raising fears of stagflation. Higher US inflation means fewer chances of Fed rate cuts, a big blow for emerging markets like India. Markets are bracing for impact. Will the numbers calm investors or rather? Investors have been on a selling spree in Indian markets since July, dumping stocks worth over 47,600 crore last month. In August so far, they've offloaded 14,000 crore more. But here's the twist. On Friday, August 8th, FPIs turned buyers, picking up equities worth nearly 1,933 crore. Is this a trend reversal? Too soon to tell. Tariff uncertainty, weak earnings, and global market cues still cloud the short-term outlook. Watch the US dollar and bond yields that'll shape foreign inflows ahead. If FPIs keep buying, India's benchmark indices could finally break out of their range since June.